Yeah, it was a good quarter for them. Comp sales were positive for the first time in 8 quarters. So I think that's
Wow.
something a lot of people are latching onto and a positive indicator moving forward. We came into the quarter thinking that they could do a little bit better than consensus on the comp line, really because of some of the positive data we've been seeing coming through in retail sales, along with the expectation that some of the recent hurricane activity would benefit them. And that's something they called out. They had about a $200 million benefit from hurricanes, which is about a 65 basis point lift to comp sales. The guidance was pretty positive. They're looking for about 1% growth next year, which we think is appropriately conservative. And it's pretty much in line with what we've heard from some other players in the home improvement space who are looking for the market to be flat to modestly higher next year. And there's really no incentive for them to come out and be overly optimistic for next year, given the struggles we're still seeing with housing.
I was struck by the fact they said they are seeing more refis. Does that mean that people are going to refi to then spruce up their house?
Yeah, I mean, in order for this industry to see more normalized growth going forward, that's something you're certainly going to need to see is people tapping that home equity, undertaking larger scale renovations. It's still one of the areas that's kind of holding back growth. They cited, kitchens and baths as a particular area of weakness.
Oh.
And the reason is because those projects are typically financed. So while they did mention that they saw a little bit of improvement, it's still nowhere near, what the industry would need to see in order to get more robust growth going forward.
Hey, Drew, it may shock you to learn that I spend very little time in either Home Depot or a Lowe's. So how does the street differentiate between the two? Because I'm looking at the stocks over the last 5 years. They're both up, 11, 12, 13% on a compounded basis. Did the same shareholders own HD? Did they own Lowe's as well? How do you differentiate?
Yeah, so the main point of differentiation between the two is really their customer exposure. You remember Home Depot is about 50% DIY, 50% professional contractor, whereas Lowe's is about 70% DIY, 30% pro customer. As we look forward, we think that the primary engine of growth for the industry is going to be from professional contractors. As you start to look out ahead and you do see people tap that home equity, we think that's where a lot of the growth is going to come from. For Lowe's, as I mentioned, they've really been focused on DIY, but over the last couple of years, they're starting to transform their business to cater more towards that professional contractor because I think they realize that's where the growth opportunity is. Mm-hmm. Now, for Home Depot specifically, their strategy is to go after an untapped $200 billion market for more complex pros, which are those looking at, larger scale remodeling projects that span a lot of product categories. And they want to consolidate those contractor vendor relationships so they could become the one-stop shop.
So here's John Tucker's complaint is that the 2x4s at Home Depot are warped.
Can you fix that?
And then, but I'm joking. But the idea is that this is a guy that does a lot of work, and Home Depot could make a lot of money off of John Tucker on a relative basis.
Well, let's not get crazy.
And he goes to the local lumber yard. I mean, can they sort of expand their base?
Yeah, so Home Depot does pretty well with lumber. It's about 8% of their sales. But to your point, I think they are expanding their reach among those professional contractors. They recently did their largest acquisition ever for SRS Distribution, who is primarily in the roofing, landscaping, and pool supplies categories. But I think what that does is it shows you that they're willing to go into these new markets to reach these new growth avenues. And I think that the SRS deal really provides a platform for them to continue to go after these different type of building product suppliers. SRS has been highly acquisitive, and they even called out on an organic basis. They're looking for mid-single digit growth next year. So I think it provides a strong platform to do exactly what you mentioned.